Good morning, everybody. It's the 9th of August. We are Signal Centre talking ball. Happy Monday to you all. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning.
How you doing?
Oh, very good in the hood. Just
Good.
recovering from Connor's 21st birthday bash, which may take a few more days, I think.
You have to cycle that out, aren't you? Sweat it out later.
Yeah, I think I will. Yeah, I didn't do any at the weekend, so I'm going to get on that bike later and make me pay for it.
Good.
Remember to rehydrate.
Yes, absolutely. Okay, so let's get stuck in then. Looks pretty eventful start to the day, but in terms of what's going on with European stocks, they're pointing lower as investors weigh the US jobs data on Friday, which was much better than expected. I guess the main news that we'll be focusing on pretty early in the video today is around gold and silver. Both tumbled on concerns it will push the Federal Reserve closer to tapering. We've seen some pretty dramatic moves overnight, which we'll come on to in a moment and see what impact that's had on the charts. It's going to be a pretty quiet start to the week today. There is a Japanese holiday today, which won't be, of course, helping volumes, but overall, this time of year is generally pretty quiet because many people are away on holidays. But other than that, Steve, it's just more of the same in terms of news. Nothing particularly stand out. So I'm quite keen to get stuck into the charts if you're okay with that.
Yeah, absolutely. I'll dive straight into gold because we've been talking about this. Obviously, while the cat's away, the mice will play. So this is the I'll go drill down to the short-term chart first, which is not what I normally do, but I just want to show you the first hour of price action overnight. All seem to be going along swimmingly. A little bit of pressure over the weekend, and then the 1750 support level broke, and there was plenty of stops, which took it all the way down to 1665. And this is a level we've been talking about for a very, very long time. 1676 is the previous swing low, and we've just pierced it. And then the reaction back higher. This is the daily chart we're looking at the moment. Looks like a very nice looking supportive candle. However, we still got a whole day to go, so let's see what it looks like by the end of the day. A bullish hammer being formed on the daily chart, but by the end of the day, I don't think it'll be quite as straightforward as that. The 4-hour chart for me gives us well, that doesn't really sort of show us anything, because that's sort of like half hour of madness has really messed the charts up. But let's think about the bigger picture. We are in a corrective phase. We've been talking about this for a while. This is the 1676 level that we had highlighted on the chart. And for me, are we going to retest this 1676 level in less or sort of like a more liquid period of trading? That's the question. At the moment, I'd be looking to stick with the hourly, stick with the short term, and look to fade it into a rally around about the 1758, 1760 level for potential for a retest, really. And we'll see how that sort of like plays out over the coming days. Obviously, silver was very linked to gold, so the algos got on it and sort of like ended up selling silver as well. So just a really highly volatile, low liquidity period has resulted in a lot of stops getting flushed out. So there'll be some people waking up with sore heads this morning. So oil, this is also on the back foot, broken down below the upward trending support line that we got on the daily chart. This goes all the way back to April last year and November last year, and obviously we've got it from July this year, and we've broken that support. Now, if we manage to close below here, especially on a weekly basis, we've got off to that sort of start, then this could lead to a deeper correction for oil. But it's left a gap on the chart, so I don't think it's going to be a straightforward case. But obviously the thing we picked up on the charts last week was this evening doji star formation, which is pretty scary looking if you're a bull or holding longs. For me, that's a sign of maybe a deeper correction, potentially back to maybe the mid 50 level. So we'll take a look at indices now. Indices are still holding on the FTSE side of things, and also across the pond, the US side of things, and the DAX is being supported. We'll have a look at the Asian Pacific a little bit closer. But for FTSE, this is the weekly candle, and you can see very little changed over the last 5 weeks. If anything, for me, that's a little bit of a topping formation, and so there's still pressure on, but with the sort of dollar strength, you'd think that FTSE would be pushing a little bit more aggressively higher. It's not quite doing it at the moment. It's having these little spates, and we've got sort of like highs around similar levels, 71.75 all the way up to 72.35. Trading though at the moment 71.05, so it's above that 7100 level, which we haven't closed above there since January last year. On the DAX side of things, again, this is actually a monthly candle. That's I have to rewind the whole thing. That was a evening doji start on a monthly candle for gold, for oil. So this is now the weekly chart, and we can see how the weeks are sort of like just dragging along sideways. So the question is this topping? Is it sort of like going to stop here, or are we going to eventually push higher? If anything, this looks like a little bit of an impulsive move and a bit of a consolidation period. So no point in fighting those bulls yet. On the Dow Jones side of things, a new all-time high last week came in at 35,250, 35,120 trading at the moment, and but that's the highest closing price on a weekly basis ever. Nasdaq, similar type of price action. We've got this 15,184 all-time high. Again, not quite the highest close ever. We had 2 weeks ago, we had a higher close. So, but still, you can't really argue against it. We're looking for this the end of the fifth wave, if it ever comes. And S&P, highest closing price ever. Let's get the top of that candle is 4,440. Just trading below there now, so still on the front foot. The indices, Aussie 200, obviously strong. China is the one that's really struggling, and that this steep correction the ABC looks to have completed. We had a decent week last week and got off to a positive start this week. So even the Asian Pacific stocks are looking up. Hang Seng also looking pretty tasty this morning. Nikkei, not so much, still under a bit of pressure, but the rot looks to have stopped for the short term. Let's have a look at Bitcoin and see what that bad boy's been up to. Well, it looks like it's done it, doesn't it? It looks like it's broken the back of that 40,900 resistance level. And now, for me, that turns into support. The weekly close came in at 43,858, and the recent high is 45,355. So this is the end of the sort of bear print as we know it. Still potential for a complex head and shoulders formation, but at this point in time, I'll be looking to buy dips to around about 41,000. Ethereum broken above the high. Ripple, not quite, baby. That's under pressure. And Cardano, again, same. Hasn't quite made the moves that Bitcoin has done. That's about it, Joe.
Fantastic run up for the start of the week, Steve. Thank you. Okay, FX. So dollar index was continued to push higher on the back of the stronger number from the US on Friday. Really big move to the upside on Friday, as you can see, that big green candle. So in terms of just explaining what's happening with this price action on the daily chart over the recent weeks, we were seeing price continue to move higher. We were focusing really on this resistance level up here at 93.43, which if it completes forms a big double bottom pattern. We saw this sort of grind higher, but then we saw it break, so a bit of a wedge formation here. We broke down, we found support at the 38.2% fib level, and we've rallied higher. So interesting point here, we've got some resistance at 93.02. which is also going to come at the underside of this broken wedge. So that will be a key level to potentially overcome. If it does overcome that, then we will be focusing again on this 93.43 level, which will confirm this double bottom pattern. So just take a quick look at the weekly chart. Get rid of all this nonsense on the charts for you. So yeah, this is what I'm looking at. We've got the double bottom, two green arrows down here. We've got the neckline, which is formed at 93.43. And now what I'd like to see is a break to the upside, followed by maybe a pullback, a nice technical pullback, and then we can look for higher levels on the dollar index over the medium term. The measured move of the double bottom is actually up at 97.72. 97.66, but there's a 61.8% fib level from the highs that we posted in March last year down to these lows in January, which comes in at 97.72. So a confluence of areas to attack there on the upside over the medium term with the dollar index. So this is very much back on, I think, following a bit of a corrective move in recent weeks. So how does that impact euro dollar? Well, quite significantly, really, because as I've been talking about for ages, is this head and shoulders top pattern that's been forming on the daily chart. We again, like dollar index, saw a wedge formation, but obviously it was the inverse of this on the dollar index. It broke up, so could have led to a bit of a corrective move higher, but the move died really, and we've seen 7 consecutive days of weakness. On euro dollar, and it's fallen down to this support level here at 117.51, which was the low that we posted back on the 21st of July. So clearly some support on offer here. Ideally, we would have seen a nice impulsive break of this neckline to confirm the head and shoulders top, but we haven't yet seen it. So I'm looking for a big flush out at some point to really confirm this top pattern. And I guess it's going to happen pretty much at the same time we see this assault from the dollar index above that 93.43 level. I think the major level for me to watch now is 117.04. That's the low that we posted here back in March. If we break that, then for me, we've really confirmed that head and shoulders top on the longer term charts, and we can start looking for lower prices over the medium term on euro dollar. Looking at cable. So that seems to have stalled. So this was, for me, a double top, and that completed on the move below this support level here at 136.70, but that failed to hold. And then we saw a decent rally upwards, which seems to have stalled around this 61.8% level at 139.91. And we are getting some reddish looking candles. We certainly saw a bit of an engulfing candle form on Friday, and prices are heading lower. There is still the possibility that this could be maybe some sort of short term flag for a break higher, but obviously that would mean that dollar would have to be weaker. And for me, the outlook on the dollar still looks pretty strong. So it may be a situation that this fails, and what we actually are seeing is some sort of large top pattern taking shape, but it's certainly not a conventional head and shoulders top, because this is, this left shoulder or potential left shoulder is in line with the head here. So yeah, a top pattern I think is forming, but not in any sort of traditional sense at the moment. Well, so we've got euro sterling. That's been pretty under pressure. Oh, get rid of that. And yeah, this is really at a key level here. So this low that we posted on the 5th of April was the lowest price that euro sterling's been at since February 2020. So as you can see, a really big line of support here. We did see prices close pretty much on that level on Friday. We're seeing a bit of a bounce back today as the bulls try and defend this. And from a speculative point of view, buying bang on that support level with a very tight stop loss is probably not a terrible strategy if you're a short-term trader, but clearly it is under pressure, and if that does break in any meaningful way on a closing basis, then we're going to be looking for lower prices, and the next level of sort of meaningful support is down here at 182.75. So potentially 200 points you could drop quite quickly if this support level fails to hold. So keeping a close watch on that.
82.75 is that, Joe?
82.75, yeah.
Yeah. Cool.
What else have we got? So, I mean, given the strength that we've seen in US dollar. That's obviously impacting all these other currencies linked to the US dollar. This is the Aussie currency versus the US dollar. Formed a head and shoulders top a good few weeks ago now and continuing to trade lower. I think what we have here is a bit of a consolidation, maybe a bit of a flag, which will have a tendency to break to the downside. We're actually trading below it at the moment. I fancy lower prices here, so I'll be looking for opportunities to sell that. The measured move of the head and shoulders top is at 70.57, so that is the target on the downside for me on that pair. What else can we look at? Let's have a look at New Zealand dollar because that had a bit of a bounce. But again, I think overall big sort of top information is taking shape, but this has been pretty choppy. So the New Zealand dollar has actually been quite robust compared to some of the other currencies. But yeah, key watch is obviously on the dollar index in this 93.43 level, and on euro dollar at this 117.04 level. So it could be a pivotal week for some of these major currencies.
Yeah, well done, Joe.
Okay, so guns to the head trades from Friday. I think you had another decent win, Steve.
I think I did, yeah. That's a bit sort of the only thing I was disappointed with. I could have really made the stop a bit tighter because it never went against me at all.
It didn't, no. So on gold on Friday, you traded this 2 days in a row. You made 7.7 ticks on the Thursday, but then on Friday, just shy of 40 ticks for a 2.43 R return. So a really good week for you last week on the gun to the head challenge. It had a 3R win in there as well, which yeah, pretty good going. I had a
Yeah, I think one of the
0.28.
things as well, Joe, is if you look at my last 10 days, I've lost 7, won 3, and my P&L is flat.
Yeah.
So it just shows you, doesn't it? You know, having a win-loss ratio of 30% doesn't necessarily mean you lose money.
No, absolutely not.
So yeah, quite pleased with that. The last, well, especially last week. Not that I'm not proud of the 7 days before that.
No. Well, mine's pretty similar as well, but we won't dwell on that too much. So yeah, tiny win for me on Euro Yen. Let's keep this ball rolling, Steve. What do you fancy today?
Well, I'll look at gold actually. I think I was trying to show you the 4-hour chart in gold. I was showing you a 3-minute chart. I just realised that's why it didn't look how I expected it to look when I was talking through it. But yeah, so this is the 4-hour chart. We've seen it break down below these key levels of support. 1750 obviously was the major one. That's where the stops were. 1723 was like a knife through butter, and 1677 actually sort of like was pierced, but not for long. So yeah, I think this now the 1751 level will act as some sort of resistance. It could push a little bit higher, but for me it's worth fading again. I think we'll sort of like, there'll be a lot of bears out there who'll want to sort of have a retest. On the 30-minute chart, we've just formed a shooting star candle, and this has been followed up by negative price action over the last few minutes. So I'm going to get short now on here. Going to have quite a tight stop. We're going to only give it a is that too tight? That feels too tight, Stevie boy. Let's give it a little bit more room. Let's put the stop at 1755. So quite an aggressive stop, but we have had an aggressive move. So really looking to really push that back down to at least retest the 1700 level, maybe. So why not leave it there?
Why not, indeed?
Not? Yeah. Actually, I'll tell you what I'll do. You know, like how I like round numbers, 6 to 1 risk reward. That's 1702 I'm targeting with a stop at 1755. So very, very aggressive trade idea. Obviously, as it would be coming off in a more general form of trading, you'd maybe taking profit as it hits these levels on the way down, but we've got a gun to a head, so we can't do that.
Cool.
Yeah, that's me.
Best of luck. Okay, I'm going to take a look at cable. As I mentioned on the overview, I think it is in the process of forming a larger top, but in the short term, bit of a range formation here. We've got the top line at 139.81 and the lower end of that at 138.73. We've seen a bit of a slip through that and a bit of sort of congested price action, a bit of choppiness. But I'm going to sell it now at 138.53. I just missed out on a few ticks there. Did you see that? Oh God. Right. Okay. So it was 3-1, but now it's going to be 2.2. So going to stop loss at 138.93, targeting a move to 137.65. Gutted.
Yeah. Yeah. So, well, let's see if the volatility continues then.
Yeah, so nothing really on the calendar front that's going to change things today. Tomorrow we do have Eurozone investor confidence reading and also comments from the FOMC member Bostic to provide highlights in a largely quiet start to the week. So we'll see if this volatility persists, if there's going to be more concerns about what we saw from the jobs number and the fact that tapering could well be on its way. Maybe a bit of a taper tantrum in some of these risk assets over the coming weeks and months.
Yeah. Okay.
Cool. Let's leave it there then, Steve. Have a great week, everybody. We'll be back tomorrow morning.
Toodaloo.
Bye bye.